Hello everyone, welcome to JAIIB CAIIB English Medium. My name is Aarti and I hope you all are doing good. So this is our target series where we are completing your AFM using their concepts. Along with that, we are solving MCQs also. So let's start today's session. Today we are going to talk about Unit 22 in which we see about debts. Yes, so currently let's understand what is this debt, what are the MCQs or what are the theory part we have, and let's solve one numerical topic from this unit. So let's start today's session. So remember, first thing, what is the meaning of debt? See, whenever we talk about any organization, or chali, let's take one example. Suppose I want to start one business known as Aarti Private Limited. Okay, this is the business which I want to start. Now, if I want to start this business, I require funds. Yes, without funds, can I start this business? No. For purchasing, yes, for appointing laborers, for purchasing raw materials, I require funds. Yes, I require money. Now, what are the ways through which I can arrange this money? I can use my own saving. Yes, I can use my own saving. Yes, I can use my FD account. I can use my salary. Yes or no? And what is the one more way through which I can arrange these funds? That is through borrowing. Yes or no? That is through borrowing. I can borrow from my friends. Yes, from my family, from bank, etc. Yes, so there are two ways through which I can arrange funds. So this own savings, when I'm investing my own amount, that is your equity. Because as an owner, when I'm sharing the ownership, yes, when I'm having the ownership, or if I say, so I'm going to say whatever amount I'm bringing, that is equity. But on the other hand, when I'm arranging the funds from family, friends, bank loan, yes, that is borrowing. That is borrowing. And this debt means you're borrowing only. Debt means borrowing only. So debt means a sum of money due by one party to another. When I'm borrowing from bank, I need to repay. I'm going to repay interest. I'm going to repay that principal amount as well. So that is debt. Means here it creates the liability. Yes, that is what debt. Now, what are the sources you can see here? What are the different sources? Now, this sources is about funds. This source is about funds. So I can take FD. Yes, I can take amount from FD, or sometimes I can take loan against this FD also. Yes or no? This is one way. I can use bonds. Yes, as a company, I can issue some bonds to the public. Means I can raise amount through the public also. Then bank borrowing, like from SBI bank loan I'm taking, or other instruments like debentures. Okay? So these are the few ways through which I can arrange funds. Yes. Now, next important thing under this is your bonds and debentures, because mainly in this unit we are going to talk about the borrowing side. When we are using bonds, when we are using debentures, that bond side means that borrowing side we are talking about. So bond means and debenture means what? So bond means bonds issued by the government or by the public sector companies in India. Lower risk, more stable. Bonds, who is going to issue this? Public sector companies, again, which is backed by government or government companies. Yes, government can issue the bonds, public sector companies can issue the bonds in India. So that is going to have lower risk and more stability. See, if anything is related to government, government will never give any higher risk. Yes, because government is not here to earn any profit. Yes, they are here to give the benefit for the society. Yes, so their objective is not to earn profit. That's why whatever bonds government are issuing, that is having lower risk. And if any instrument is having lower risk, that is going to give lower return also. Always remember this point. Lower risk, when risk is low, yes, you will get lower return. Yes, because if you are not taking any risk, you will receive minimum return as well. Yes, like if you use fixed deposit, there is no risk. So that's why there is very less minimum return. Yes, but if you invest in your share market, higher risk, higher returns. Correct? So next is your debentures. The private sector companies also issue bonds, but when private sector companies are issuing the instrument through which they are borrowing, that is known as debentures. That is known as debentures. Higher risk, more volatile. Higher risk, more volatile. Okay? If you invest in this Bombay Stock Exchange, National Stock Exchange, yes, if you're purchasing through this stock exchanges, Reliance Industry shares, Tata shares, share market, you must have heard. Then what we are purchasing through that market? Debentures. And debentures are issued by private sectors. Okay, and this gives the higher risk, and because of higher risk, as it is having higher risk, it will give higher or lower return? Higher return. No one can predict market. No one. Yes, so this is the difference between bonds and debentures. Okay, both the ways, what common thing we are doing in both the side? We are borrowing. Okay, chali, coming to the next, that is bonds. Bonds. So a bond is a long-term instrument. Now long-term instrument means bond is going to have more than 12 months life, or security that pays a series of future cash flows consisting of interest payments over a period and redemption amount on maturity. Suppose what they are saying, let's understand with one example. Okay. Suppose if I want to take SBI bank loan, and this loan is for that home loan. I have applied for home loan. Okay. Suppose I applied for 50 lakh home loan. Now tell me, what things I need to pay to this SBI bank? Interest. Yes or no? Interest as well as principal amount. Yes or no? Interest as well as principal amount. Correct? So when I am repaying it, because I have liability to repay principal amount, and for using the principal amount I am paying extra fee, that is interest. The same thing under bonds we are doing. As a company, this is Aarti Private Limited. Now Aarti Private Limited wants fund. Yes, now Aarti Private Limited wants fund. So what they can do, they can issue bonds. They can issue bonds. This is one instrument, and this instrument is issued, or let's say this is not private company, this is your limited. Yes, this is your PSU, Aarti Limited. So here we are issuing the bonds to public. Okay. So while issuing the bonds, this is the instrument we are transferring to the public, and from the public we are raising amount. Okay, we are raising amount from public. Now in this case, Aarti Limited, this is the first thing. Company is issuing bonds to the public, and public will pay or give amount to Aarti Limited. Okay, this is the first thing. Second thing, Aarti Private Limited, Aarti Limited company will pay timely interest on this bonds, because Aarti Limited will use amount which is raised, which they have raised from public. Okay, so for that they will pay interest, and at the maturity, like we have raised this amount for 5 years. So at the time of maturity, Aarti Limited will repay that principal amount as well. Okay, so this is what they are saying. As an individual, when we are taking any loan, we are repaying the interest and the principal amount at maturity. The same thing companies are doing. They are taking loan from bank, no, from public. That time they are issuing bonds. Okay, they are giving an instrument, one certificate that yes, we are borrowing. That is a proof, because this bonds will act as proof that we have raised from public. Okay, so this is your bonds. For example, a company issued a bond, face value 1000, carrying a coupon rate 10% for 10 years. Here, what is the value of one bond? Here, the value of one bond. One bond, that is rupees 100. Okay, and coupon rate, that is interest that we are paying, is equal to 10% for 10 years. That is 10%. What is the interest payment we are going to make on this bond? That is 10%. Okay, coupon rate. See that when we are taking loan from bank and we are paying some interest rate now, that is the same thing we are paying here also, known as coupon rate. Okay. Now, interest is usually payable at fixed intervals, like semi-annual, annual, sometimes monthly. Semi-annual means your half yearly. Then annual for 12 months. Yes, sometimes monthly. For each month you are paying interest. So these are the way, some introduction of your bonds. First we have understood the meaning, then example, and then how interest. Interest here means your coupon rate, or you can say your coupon interest. Coupon means your interest only. So how you are doing your coupon payment. Okay. So this is about your bonds. Now, there are different types of bond. So let's start with the first one. That is fixed rate bonds. Fixed rate bonds. Like we have fixed deposit, FD. Okay. If bank is saying FD rate is 6%, means whatever amount individuals are investing, they will receive only 6% per annum. There is no change in this rate. Things are going to be fixed. Correct? Same thing we are going to apply in this bonds. If company, that Aarti Limited, is saying we are issuing bonds at the rate 12% per annum, that bond will hold 12% per annum till the life of that bond. Okay, suppose we have issued the bonds for life equal to 3 years. So for 3 years, each year 12% Aarti Limited will pay to their bondholders. Okay, now next is your floating rate notes. Floating rate, fluctuating. Yes, this is a variable coupon which is linked to reference rate of interest. If RBI is reducing their rate, they are increasing their rate. As per that, you can see the adjustment in the rates also. Okay, the rate is not going to be constant. Here you can see fluctuating. That is your floating rate notes. Next, zero coupon bonds. Now this is very interesting one, and this is important also in exam. They can ask you direct question based on this. So zero coupon bonds. Now zero coupon. See what I told you about coupon means. Coupon means interest. Now read it again with this term, zero interest bond. Zero coupon bonds means zero interest bond. Zero means nothing. Hana? So here the bonds will carry zero interest. So as a bond holder, how we are going to earn? See, let me tell you. Here is Aarti Limited. Yes, here is our bond holders who are ready to purchase bonds. But this time, Aarti Limited said that we are issuing zero coupon bonds. Zero coupon bonds. And if you talk about the actual value of the bonds, yes, if you talk about the face value of the bond, that every time this Aarti Limited was issuing, that is equal to rupees 100. Every time Aarti Limited used to issue rupees 100 face value per bond. Okay, for 3 years at the rate 12% per annum. Okay. So this was the thing earlier they used to issue. But this time they are saying we are issuing zero coupon bonds. We are issuing zero coupon bonds. Now what is the zero coupon bonds? Means they are issuing the same bond which they used to issue at 100, and then on that bonds they were paying 12% for 3 years. Correct? But this time they are saying we are again issuing the bonds, but this time we are issuing the same face value which is 100, but we are issuing at 80 rupees for same life, that is 3 years. We are issuing for 3 years only, but this time we are issuing at discount. See the actual MRP, if you are not getting this thing, that biscuit packet is available for 10 rupees. Every time you pay 10 rupees for purchasing that biscuit packet. But this time that shopkeeper is saying you can purchase that same biscuit packet for 7 rupees. Means here you receive discount. Hana, you received discount. So here at the time of issuing, bondholders are giving 80 rupees and they are purchasing certificate. They are paying 80 rupees and they are purchasing certificate. But the twist is at the time of maturity, this Aarti Limited will pay rupees 100. And this is how bondholders are gaining. See, ultimately, what is the total amount they are receiving as a bondholder? 100. And what is the invested amount? How much they have paid for purchasing one bond certificate? 80. So you can see here 20 benefit. And this benefit is known as zero coupon bonds. Okay, chal. Then one more we have, that is convertible bonds. Convertible bonds means at the time of issue, you are saying that we are issuing bonds, but after few years, you are going to give right to convert it into equity. At the time of issue, you are saying we are issuing bonds. Now, after 2 years, bond holders can convert it into equity. That is what conversion. Okay, this is conversion bonds. Here you are giving option to bondholders to exchange a bond with number of shares of the issuer's common stock. Common stock means here your equity. Means now if your bondholders are ready to purchase this convertible bonds and they are ready to acquire equity, so now they will hold ownership. Okay, they will not receive any interest. So this is your one more type. Then let's do this part, that is valuation of bonds. Valuation of bonds means what is the true value of that bond? What is the true value of bond? Because when we are investing, what we are going to see, we are going to observe whether we are paying good amount, overpriced or underpriced. Okay, suppose if I am saying, for example, I want to sell this pen. Okay, I want to sell this pen and I am saying I'm selling this pen and I'm ready to sell this pen for rupees 15,000. Suppose this is just normal pen. Okay, and I'm saying I can sell this pen for rupees 15,000. What you will think? Or let's increase the amount. Okay, suppose I'm saying I'm going to sell this pen for 1,50,000. So are you interested to purchase this pen? The answer is no, because you know it. This amount is over. This is overly priced. So you will reject it. But if I'm saying I'm going to sell this pen for rupees, suppose 100. So you can say, this is a good amount. You are ready to pay it also. So here you are doing the valuation. Whether the thing is actually that much worthy. If it is, you will pay. You will happily pay for that. But if it is not, you will never going to pay it. You will reject it. Yes. So for valuation, for knowing whether for knowing the value of that thing, whether that is overly priced or underpriced or that is okay. For that we need to do some valuations. So here we have valuation of bonds. So how you can value? You can value the bonds with the help of two things. So in bonds, you receive two things. That is your interest plus principal amount है ना at the time of maturity. In bonds, we receive two things, interest and principal amount at the time of maturity. So with the help of these two things, we will value the true value of the bond. Okay. Now how to use this formula, I will tell you. Chaliye, so let's start this. A bond with a face value 1000 carries a coupon rate of 10% per annum payable annually. What will be the annual interest payment? Here you need to calculate just interest payment. This one is the simple one. Chaliye, so everyone tell me your answer. Bond face value 1000. Okay, coupon rate equal to 10% per annum. So what is the annual interest payment? Very simple. 1000 into 10%. That is your rupees 100. This is your answer. Okay, this is how we calculate interest payment. Yes or no? Chaliye. Now let's calculate the value of the bond. Now I hope everyone understood it, how to calculate the interest. Okay. 5-year bond has a face value 1000 and pays 8% annual interest. If the market value of interest rate is 10%, what will be the bond's approximate price? Means what will be the true value of the bond? Okay, so let's start this solution. Now, for this 5-year bonds, for this 5-year bond, what is the face value? 1000. And what is the coupon rate? How much we are going to receive interest on this bonds if we purchase? That is 8% per annum. Okay. But as an investor, or if I say as a bond holder, I want 10%. Okay, this is the market rate of interest, or you can say in market, if I invest in other things, I can receive 10%. But for this specific bond, what is the interest rate I am receiving? 8%. So can you tell me the coupon amount now? Just use the previous question formula. 1000 into 8%. So 1000 into 8% is your 80. Yes, and for how many years you will receive? For 5 years. Means for first year also 80, second, third, fourth, fifth. Okay, for 5 years you will receive same 80, 80, 80, 80. Now, for the fifth, or you can say at the end, you will receive your principal amount also. And here you will receive 1000 only. Hana? Here you will receive 1000 only. If nothing mentioned, we are assuming whatever the face value is, the same amount we are going to receive at the end. So at the end, you will receive 1000. This is the interest amount. This is the principal amount. Okay, so this is about your bonds. Now as an investor, what is the interest rate I want from this bond? That is 10%. Okay, that is 10%. So this amounts, what I'm just now I have calculated, this belongs to future. Okay, today is my 0 time period, and this amounts that 80, first, second, third, fourth and fifth. This 80, 80, 80, 80 and 1000. This amounts are from future. Okay. I have not purchased this bond yet. I am just valuing whether to purchase it or not. Okay, so this is the amount I have calculated that I will earn if I purchase it. But I want to know today's value. But whatever amount I'm paying today, that is worthy or not. So what I will do, I will calculate the future values amount. Present value, today's value. Yes, I will calculate the future incomes to value in my today's value. Okay, for this valuation, for this conversion, I am going to use time value of money, and I will use present value. Okay, I will use this present value. So here luckily in question they are giving use present value for rupee 1 for 5 years. Okay, means for 1 to 5 years, whatever income you're receiving, whatever income you receive. Okay. So this is just the hint they are given. Suppose if you receive 1 for 5 for 1 years, for 1 year, second year, third year, fourth year, fifth year, or if you earn 80 rupees for 5 years, use this 3.791. Okay, this is the present value, and present value I will calculate with the market value, that is 10%. And here they have mentioned it. So how to calculate the true value? Just use 80, your interest amount, multiply with the present value of 10% for 5 years, add redemption amount, maturity amount, with the multiply with the present value of 10% at the end of 5th year. Okay, so just take 80 yearly income, multiply with the present value factor, that is 3.791 plus 1000 into at 10% for 5 years, that is 0.621. Just multiply this and tell me the final answer now, everyone. 80 into 3.791, that is 303.28 plus 1000 into 0.621, that is 621 plus 303.28. So correct answer is 924.28. Answer. The true value is only 924, and you are paying 1000, means you are paying extra. Hana, you are paying extra. So this bond is overly priced. You will never purchase it. So this is how you need to calculate bonds value. Okay, chaliye. Let's solve one more question based on this unit only. So which of the following is a characteristic of zero coupon bond? They provide regular interest payment. No. Zero interest. Correct. They are issued at face value. No. They do not pay periodic interest but are redeemed at face value. Yes. They issue at discount, and at the time of maturity they are paying face value. So correct answer is your answer C. Then next, what is the key characteristic of equity financing? It creates legal obligation to repay with interest. Then it increases the company's debt burden. It involves giving up ownership and control. It has a fixed maturity date. Equity means when you are sharing ownership. Okay? So when you are sharing ownership, you will never receive any interest. This will never create burden as a equity, as a debt, as a loan. Yes, it has no fixed maturity date. Correct answer is it gives ownership and control in that company. So correct answer is your answer C. In case of liquidation, who gets paid first? Equity shareholder, preference shareholder, debenture holders and creditors, promoters of the company. See, suppose if I started my business, now I am not able to continue my business. What I will do, the first thing, I will pay to my creditors. Yes, I will pay first to bank loan. Correct? Before retaining my own amount, before giving to my preference shareholders or to my promoters, firstly I will pay to the outside parties, to the third parties. Okay? Like debenture holders, creditors, banks. So who will get first at the time of liquidation? Debenture holders and creditors. Okay. So this is about your YTM unit. But remember one thing, if you want to do practice, see, for calculation of this YTM, we require practice. And without practice, you cannot solve this YTM numericals in your exam. And in your module C, this unit is one of the important unit. And in exam, if they want to give numericals, for sure they will use YTM unit. So if you want to cover this concept, you can join our upcoming batch, that is Officers Pro batch. Okay, so this officers batch, this is designed for JAIIB November 25. Here we are going to give you conceptual study we will do. Then with the updated course, okay, so many things are updating from time to time, like income tax, GST. We need to work as per that. Along with that, you will receive test series, unit-wise test for each unit. And that test is framed as per the exam pattern, as per the previous questions. Yes, as per the new pattern that they have just now they have introduced in May 25. And also along with this, we are providing you ebooks for a self-study. Okay, so these are the things we are providing in this particular batch for your all compulsory subjects. And we are starting this batch from 2nd August. Now, if you want to enroll in this, use one coupon code for maximum discount. See, don't purchase directly this batches. Use this Y895 so that you can receive maximum discount. Okay, this is the coupon code. Now, after that, you have Mahapak also. Like, you want to clear your concepts. Then you know that after completion of this concepts, you want revision. Yes, you want crash course so that you can complete this whole course again in a very fast manner. You want revision classes also during your exam time. Okay, so again and again enrolling is quite costlier. So what you can do, you can enroll in this Mahapak. Once you enroll in this, you will receive all the classes till your exam. Okay, so online live classes, mock test, ebooks, recorded videos, formula sheets, study planner. So along with this, we will be sending you the books for your MCQs. So that is the benefit. This books will be delivered at your home. And for this, you can again use one coupon code if you want to purchase this. And the coupon code is Y895. Along with this Y895, you will receive double validity. Remember, for double validity, you need to use this Y895. Okay, so this is about your Mahapak and this is our upcoming batch. So start your preparation early so that you can clear your exam in your first attempt. So now let's find out the